Hi, today is January 17th, 2013, and this is Brian Shannon from alphatrends.net speaking. Let's take a look at Apple here. I wanted to do a video because I can speak with a little bit more clarity than I would be able to get out on a blog post. Since the stock closed down at about 485, I guess, 2 days ago, from those lows that day, the stock has rallied 25 points, and it's right up into this prior band of support. And what I consider, a lot of times what you hear in technical analysis is that support broken tends to act as resistance. Well, it's not an exact precise level. That isn't, it's 505.28. Instead, it tends to be a band or an area where it's kind of banged away, and then the sellers finally got a hold of it and took it lower. So support broken tends to act as resistance. So we have to look at this and say it's in that band of prior support, and this is where we would expect it to be likely to find some resistance. When we drill down to a 10-minute time frame, you can see here I've got a 5-day moving average. On the intraday time frame, here we have it overlaid. This is the average of the last 5 trading sessions, and that 5-day moving average is still declining. If we actually back it up to the 30-minute time frame, you can see that we had resistance right before the breakdown, and here's that band of prior support. So we had seen a little resistance and then some support in here, resistance, back to support, and now we're in that area once again. We're going to need to get back above 515 for this market to consider the possibility that maybe it's going to turn. Now, there's a saying, from failed moves come fast moves, and what that is basically would turn into a bear trap, where the people who waited to sell their long position down below this 505 area, basically, they spit their stock out down here, and if it can recover back up into there, I think we've probably exhausted the supply, and we have the potential of a turnaround getting back above and holding above 515. Now, when we take a look at the weekly chart, what we've been talking about is the Fibonacci off of the 2009 lows. That is, from the 2009 lows up to the highs that we had seen this year, late 2012, a 38.2% retracement would get us down to about $465 a share. This is also where we have this trend line from those lows, and the last time that trend line was touched was back here in the summer of 2011. So what we can do there, and this is something I had put on a blog post the other night, was to take a Fibonacci off of that area as well. And you can see that the 61.8% retracement from this low to the high comes in at about that 465 level also. So what we're looking at is, when we go back and add this Fibonacci back on once again, we've got the 2/3 and the 2/3 of the smaller move, that is off of this trend line touch. 2/3 retracement gets us down to 465, and off of the 2009 lows, a 38% retracement comes in, and that's also where we have the trend line. So that's a potential level that, if the market does in fact find resistance in here and turns lower from these levels, and we have to look at it as guilty till proven innocent, with a declining 5, 10, 20, 50, 100, 150, 200-day moving average. I think that if you're buying this stock, we have earnings next week. Now, earnings next Wednesday, the stock could gap up to 525, and I would say that the risk is you miss out on what, maybe a 25, 30, 40, 50 point move in Apple. It's going to take a while for it to turn around. The bigger risk, though, for long side is that we do still have a downtrend intact, and in addition to that 465 level, we also have to be concerned about this bigger level in here. On the right hand side, what we have is the volume that traded at each price. You can see that in between, basically where we are, in between the 500 down to about $420 a share, very little volume took place. It kind of traded up through here, and that leaves a little bit of an air pocket that if this stock breaks back down probably below about 495-ish and then takes out the lows from last week, I think it's a very strong possibility that we at least see 460 465, and then perhaps we could even drop down towards about 420 eventually. So the risks remain high in Apple, but we have to be aware of all potential scenarios, including the scenario that getting back above and holding above 5 to 15, that this ends up turning into a bear trap. It's always interesting in the market. You don't have to have a position. Being in the sidelines and cash, I think, is probably the right thing for most people in Apple right now, unless you're a very active short-term trader. Thanks for tuning in.